Good morning, traders. It is Monday, June 17th. Taking a look at the charts, we'll start off with the SP 500 futures. Now, if we just look at our trend following chart here on the 30-minute chart, you can see we've gone from a downtrend. It finally put in a bottom, reversed to orange and green, and then it did the same thing. We reversed back to orange and then red, and then back to orange and green. So we are in a uptrend at this point on a short-term technical view. We've got these hashtags. We've got this lower hashtag, this upper hashtag, and more or less, we saw the market gap last week right up. We had a red hashtag up here indicating if price was to move up there quickly, it would hit an overbought territory and sell off. We talked about it in pre-market, and the market gapped higher, gapped up above our short-term overbought indicator. Gaps tend to get filled, and the price faded down for pretty much the rest of the session. Now, overall, things are starting to kind of coil up here. It's building some energy. The markets are moving up this 5-day moving average, which is very key. The 5-day, if we're in a high momentum market, meaning it's going to keep rising, it's going to find support at the 5-day and keep going. So on Friday, we saw the market pop right near the close, pushed above the overbought territory, more or less closing at overbought territory. And today the markets are relatively flat, a couple ticks to the upside, nothing significant. But the big question here is we're overbought, we're at this 5-day moving average, we've got this bull flag formation in price. And the big question is, are we going to crack it and move down towards this 20-day and find some support, or are we going to pop and extend and more or less see the same rally we saw to the upside continue on back higher? And that would push the indexes more or less. They'd probably stall out near these highs. They wouldn't maybe make the full measured move all the way to the upside right off the hop, but we could see a pretty significant pop and rally. So it's going to be a real pivotal week, depending if the equities markets crack to the downside and flush out, or are we going to pop and extend and continue to move higher. Now, if we look at some of the other leading indicators and asset classes, we can get a feel for what some of the other markets are doing. So if we take a look over at the Russell 2000, the Russell 2000 has kind of been underperforming and lagging. Hasn't had as strong as a bounce. It's kind of consolidating, stuck under all the key moving averages almost. Usually we want to see small caps lead the way. That's the same with the transportation index, IYT. It's had a nice pop, but it is under some pretty significant resistance areas, these previous pivot highs, this gap down. It's kind of just starting to fill that gap there, and it's underperforming as well. Typically, we would want to see the transports and Russell kind of lead the way, and they're not at this point. And if we take a look over at the chart of bonds, bonds have been moving up, and in the last few sessions pushing back up to these highs, forming a really strong looking bull flag. So money is moving out of the riskier stocks, transportation, small caps, into the safe havens and other plays like bonds. And we've been seeing obviously metals move up, gold popping and holding near these highs over here. And also the miners have been more or less outperforming as well, trading up near these highs. So money is rotating into these asset classes we've been talking about. And when the gold miners are outperforming the rest of the stock market, even when the stock market is rising, that is a sign that we are probably getting very close to a significant top in the equities markets. And we should see the miners and metals continue to outperform and move higher while the stock market maybe grinds higher or pulls back going forward here. Let's take a look over at the dollar. The dollar down today, but last Friday had a big pop. It's more or less recovered this level. We talked about it trading in this more or less this range. It's been kind of oscillating through this area. It's got potential to go all the way up, push to some new highs. If it does, we're going to see metals be under pressure for a little bit, but overall, it's still holding in this range, and the dollar could slowly grind its way back up, and we could see metals hold their ground fairly well, even with a rising dollar, as money is now flowing into precious metals as a safe haven as well as the US dollar. So money is flowing into both, and we could see them slowly kind of grind themselves higher as a kind of a dual asset safe haven play here. Taking a look over at, let's take a look at energies real quick. Natural gas down 0.5%. Natural gas really nothing too exciting here just yet. It looks like it's trying to carve out a bottom. It actually looks like it's got a little basing formation, Let's just look at this previous one where the market sold down, put in this like high volatility bottom and then popped and then eventually continued to more or less channel to the upside and eventually started to break down. We've got a very similar price action starting to go here as well. Whoops. Let me just grab a box. We've got this potential little bottoming formation. Price is testing, working itself out. If it starts to rally up here, we could start to see it move back up to the 250, potentially channel its way to the upside going forward. We could see it start to kind of move up into this 250 range. Again, it is in a downtrend where it's had a series of patterns where it breaks down, consolidates, breaks down, consolidates, and there could be a small play to the upside here, but I do feel as though it could still be out of favor, and we could see a big sell-off later this summer down towards the $2 level, which could be a good opportunity to the short side. Could also be a great opportunity to the long side later this year come September. Looking over at crude oil, it is down 0.4%. Crude, I feel as though it's similar to natural gas. I feel like crude's trying to put in some type of bottom here. It's still working itself out, and it's got some inside bars here, meaning we are inside this big red bar, and it could very easily go down and poke to some nominal new lows. We could see it drop down here, and it's these nominal new lows. You make one new low, another new low, another. It's these series of small minor new lows. Things start to go out of favor. People give up on them, and that's when you start to see a reversal in the trend. So we're keeping our eye on it. Potentially we could be getting long oil, potentially natural gas as well for some type of bottoming bounce play. Now, if we take a look over at Bitcoin, we haven't got short Bitcoin because it is in a very strong uptrend. It's forming this bearish formation that looked really good to short last week, but just don't want to buck the trend because the way Bitcoin is moving, the overall trend here is to the upside, and you hate to try to bet against the overall market in Bitcoin. Huge move. This morning it's gapping up 10, almost 11%, so it's pushing up to these new highs. And until it turns back into a downtrend, which means we need to break one of these, like this neckline, we need to break that level or this level here. Until it breaks down and is in a downtrend, you don't really want to be shorting and going against it. And this is a perfect example of why. Even though this pattern looked really good, we talked about it several times. It's just you got to be very aware that this longer term trend is to the upside, and we don't have any signs that it was breaking down on our cycle forecasting down here. So more or less, as long as this pink line is up above this 50 area or even up in this upper reversal zone, the market is in a very strong uptrend. It's outperforming, and we got to be aware. So overall, this might be some type of exhaustion gap. We've got a pop to the upside, very sharp pullback, another pop to the upside, a sharp pullback, and another pop to new highs, and we could see another pullback. It could be a triple, three surges to a high, and this can be a very strong topping formation. So again, it's looking like it's trying to put in some type of topping formation with the volatility, but we don't really want to bet against the market at this point until we see it actually start to break down and go to the downside. I think that is really about it for this morning. Let's just take a look over at the VIX real quick. The VIX continues to kind of fizzle out and move down. We ended up shorting it right up here near the highs on one of these days. Within a day or 2 days, we got our first target, and then we hit our second target down over here. Continued to kind of trade sideways, fizzle its way out. Overall, it is kind of trading in this potential larger, this elevated level here, where instead of it being down in this lower range, like over here, we're now in this kind of upper range, and we could see the market roll over at any point. We could see another big spike in the VIX. Of course, we never know which way the markets are going. We just have to follow them one day at a time and kind of follow its coattails, ride its coattails. So at this point, we're waiting for the equities markets to see if we're going to pop and break out and which way metals are going to go. You look at the SP 500, again, it's built this little bull flag. It's up here holding up, and it could extend very quickly to the upside, or we could roll right over and sell off, and that's where we are. We could be either about to push to new highs, or we are in this type of range right here, and we could very much so see a very strong sell-off at any point. So that's where we are. We're going to look for some new trades this week and talk to you soon. Bye bye.